Think you've got momentum trading all figured out? You might want to think again. See, momentum might be the trading world's favorite buzzword, but it's also the most misunderstood. Whenever the word momentum gets thrown around in trading circles, it's easy to think, oh, I know what that word means, but what if I told you there's more beneath the surface? Well, stick around, because we're unlocking the strategies used by some of the most successful traders of all time. Grasping the true essence of how professional momentum strategies work could be the game changer you've been looking for. So, let's dive in. How does a momentum strategy work? As you might guess, momentum is a strategy that seeks to make money from long-term trends in financial assets. It's the details that matter though, so let's get into some of the details of the strategy. And for this, I'm going to rely heavily on information from Andreas Klenow in his book, Following the Trend. In that book, he walks you through a specific momentum strategy, so go there if you want more specifics or you want to look at the backtest results. But basically, the point that I'm trying to get across is that this information is very well known in the professional world, but seems to be extremely misunderstood in the retail day trading world. So to start, we need a universe of assets to trade. See, momentum is not a strategy you want to perform on a single asset. It might be years or even decades before a single asset starts to trend. However, there's always something trending. So having a universe of assets to trade provides more opportunities to find something that is trending up or down. This also can provide diversification for us. We can have multiple positions on at a time, and the winners offset the losers. Think of it like a buffet. You want a little bit of everything. That way, if one dish ends up being too salty, you have plenty of sweet and savory options to balance it out. Plus, you don't want your whole meal to be just carbs. You need fats and proteins in there too, right? This means that we have to do a bit of work to determine what should be in that universe of tradable assets. And this is where some of the biggest innovations in the space have come from. The idea is to have a universe of highly uncorrelated instruments. That will give us the best diversification, which is key to maintaining a high Sharpe ratio. And this is where highly sophisticated machine learning processes can come in and help optimize the universe to trade from. Now, running this on a basket of futures is particularly popular because futures have a strong propensity to trend. Hence, momentum is extremely popular among commodities trading advisor strategies. In other words, the top players in our space, the futures trading space, are usually trading momentum. Next, we need entry and exit conditions, and these can actually be quite simple. For instance, we can look at new 50-day highs and lows to signal a breakout. I like to call such signals a trigger because such triggers are usually combined with a filter as well. A filter would be like the 50-day moving average must be above the 100-day moving average for us to go long. Now, all we're doing is looking for things that signal the beginning of a trend. And that's super important because these conditions are not what I would call predictive. Most of the time, a trend does not materialize, and the win rate of these strategies is actually quite low. But what it does do is ensure that if a trend does happen, you'll be in on it. You can make so much on these huge trends that it makes up for any of the losses. Now, the third thing is we need a position and risk management strategy. Different instruments have different amounts of volatility, so each position needs to be sized appropriately. A very common way of doing this is looking at ATR, or average true range. You'll notice I always put this indicator on my daily charts, and there's a slightly more advanced version of this indicator in my paid NinjaTrader indicator suite. My version of the indicator allows me to express the ATR in terms of points or percentages or ticks, as well as compare the current day's range to the average true range. And you can check out my paid indicator suite at speculatorseth.com. But anyways, ATR is an effective measure of how much an instrument tends to move and allows you to estimate how much money you might make or lose in a day. By combining this with how much of your portfolio you want to risk, you can come up with the appropriate position sizing. All right, so those are the basics of running a momentum strategy. Now I want to get into the misconceptions, how retail traders, especially day traders, tend to misunderstand or misapply momentum. And I have to warn you, this first one in particular is really going to disappoint you, but don't go, stick around, because towards the end of the video, I will show you how you can still effectively incorporate momentum into your own trading. So the big problem is that this strategy requires a significant amount of capital to deploy effectively. Like, usually these funds start with assets under management of 10 million at a minimum. Otherwise, the size of most futures instruments isn't quite granular enough to size positions what they want. One contract and all of the costs ends up being too much for the math to really work. Now, we should keep in mind that a professional fund also needs to make enough from the management fee to pay the fund managers and employees. So an independent trader could probably work with less, but there's still some significant challenges. The next big challenge is that the drawdowns on momentum are pretty steep. Just like everything else, making money requires taking risks. Momentum strategies can have good Sharpe ratios because they make so much compared to the risk that they're taking on. However, they are taking on more risk than you would take on just holding an index fund. In fact, up until the 2020 pandemic, momentum strategies were going through quite a dry spell. Many momentum funds went under during that time. There was a big debate at the time as to whether momentum still worked, and I think that there's still concerns that maybe the edge in it has kind of disappeared a little bit. So you really need a strong ability to take on risk for a momentum strategy to be appropriate for you. The next issue, and this is the one that just irks me the most, is that it's not a day trading strategy. Again, a key part of how this works is that you make so much on the winners that it makes up for the losers. So to really take advantage of those winners, you really want to hold on to these positions for several months. And you just can't do that if you're getting out of all of your positions at the end of every day. You'll also notice that all of the entry conditions that I've discussed were using daily data. I have seen some studies suggesting intraday time series momentum, like the first 30 minutes of the S&P 500 predicts the last 30 minutes. For the most part, though, the research focuses on daily and weekly time series momentum. There is just too much noise and too many other factors that are much more important on an intraday basis for momentum to really work at that time frame. It's also key to realize that momentum is a portfolio strategy. It doesn't work without a wide enough variety of uncorrelated instruments to trade from. You have to have a large enough sample size for the stats to work in your favor. In fact, many argue that the real magic in a momentum strategy is in selecting the universe of assets to trade and not the entry conditions. Which inevitably brings me to my endless crusade against technical analysis. Yes, I'm bringing out the soapbox because a major part of why technical analysis is so popular in the retail trading community is because we've all read about the success of momentum traders in the 80s. I hope you can see, though, that what is taught as technical analysis to retail traders just doesn't line up with the key components of a momentum strategy. Like, at all. It's like a game of telephone, and the retail traders just missed some key details. And you know what? I don't blame them, because I think in some instances, some of these momentum traders kind of said things to intentionally mislead people. But when you look at the differences in how retail traders have kind of morphed it, it really highlights the kind of fallacies that retail traders tend to make. For instance, most retail traders are looking at the chart of an individual asset and trying to combine all of the patterns they know in order to predict the next move that day. That's trying to particularize the general. It's a statistical fallacy, especially since these signals don't predict the next move as much as put you in the position to take advantage of the magnitude of a move if a trend happens. So for this to work, you have to take all of the trades, and it's only effective because of the construction of the portfolio. And yet you never see anyone in the technical analysis space teaching you about correlation matrices. And this is why I say momentum is a quantitative strategy, not a technical analysis strategy. See, I argue that the only practical definition of technical analysis can be the strategies commonly taught as technical analysis. Since popular technical analysis doesn't teach momentum properly, momentum can't be considered a technical analysis strategy. But that's a pedantic argument about semantics that you could bring up for discussion when we're live streaming. We've got to talk about how we can apply this information to our day trading. We can still take advantage of momentum even if we don't have enough capital for a proper momentum strategy. The key here is to incorporate it into the day trading framework I've spoken about in other videos. I go into the most detail about this in my strategy PDF, so I'll put the link in the video description, or you can sign up for free to receive an email with the PDF. But in short, we want to look at all of the information that we currently have that could predict future orders. Then we combine all of those flows together, and after combining them, we look for an imbalance between buying and selling. If we see evidence of that predicted imbalance in the flows we're currently seeing on the DOM, then we take a trade. So momentum is just another one of those predictors of order flow. If I see momentum on my daily chart, then I know those big funds are going to be active that day, and that's one of the flows that I'm going to consider in my analysis. And when those momentum flows do come in, you will see some of the craziest flows you will ever see. So keeping track of that daily chart and knowing when momentum is starting to become a factor is super important. Now, there's even analysts out there at the big banks that are able to quantify how much order flow will come in from those momentum following funds. These reports sometimes leak to the public at places like Zero Hedge, so keep an eye out for them because it's some of the best info you can get these days. If I'm honest though, this all just kind of feels like a consolation prize, doesn't it? Honestly, I'd rather just run a momentum fund myself. I actually am kind of starting to move in that direction. I've passed the Series 65, I've passed the Series 3, and we're working on some strategy details. I've even found consultants for the compliance side. Of course, there are already momentum funds out there, but I think that we might have an opportunity to bring momentum strategies to the average person. See, normally you have to be an accredited investor to invest in such funds, which means you have $1 million in net worth excluding your primary residence, or you make more than $200,000 a year or $300,000 together as a couple. And then on top of that, most funds have a pretty steep minimum investment amount that is just outside of what most people can do. This might be changing though. Legislation passed in 2023 directs the SEC and FINRA to introduce an exam that would allow investors to become accredited from passing that, which means all you have to do is pass the test, and then you'd be able to invest in my momentum hedge fund. And I'll make the minimum investment amount like really small, like $1,000, to allow as many people as possible to participate. So what do you think? We might need to change a few things with the YouTube and the live stream and stuff, but we could probably figure that out. But I guess it is a pretty crazy dream, but that's what makes it a good one. So first thing, we need $10 million. If you know anybody with $10 million, let me know. In the meantime, I'll see you every morning at 8:30 Eastern time for the live stream. Stay excellent, team.